Exercise 1618, classifying items. So the statement of cash flows categorizes like transactions for optimal reporting. So what we're going to do in this exercise is we're going to look at different types of transactions and say which section of the statement of cash flows they go into. So if something goes in the operating activities section, which means all of these events, it's going to be an O, and if the item is a positive, in other words, if cash is going to be added, then it's going to be O plus. If cash is subtracted, it's going to be O minus. Investing activities will be I with a plus or minus. Financing activities will be F with plus or minus. Non-cash investing and financing is NIF, N-I-F. An activity that is not used to prepare the indirect statement of cash flows is an N. So remember, we're doing the indirect method. So we're first starting with a loss on the sale of land. So remember, losses as well as gains are backed out of the operating activity section. So it's going to be an O. And what do we do with losses to back out a loss? A loss subtracted from net income originally, so to back it out, you add it. So that is an O plus. Next, we got acquisition of equipment by issuing notes payable. So normally, if we get equipment, which is a long-term asset, it goes into investing cash flows. But notice this says cash flows. Is there a cash flow if we are paying for it with a note? There is no cash flow, so this goes to non-cash investing and financing. Getting equipment is the investing portion of this, and issuing a note payable is the financing portion of the NIF. Payment of long-term debt. So remember, changes in long-term liabilities goes into the financing section. And since we're paying cash, that will be a minus. Next, acquisition of a building by issuing common stock. So we got a long-term asset, so it normally go in investing, but cash is not involved. We did not give up cash, we issued common stock. So the financing portion is the common stock, investing portion is acquiring a building. So that's NIF, non-cash investing and financing. Next, we have an increase in salaries payable. So salaries payable is a current liability. So if we have an increase in a current liability, we're going to add that. So that's going to be an O plus. And notice this is the operating section. O plus. Next one, we have a decrease in inventory. This one, we shouldn't even need our cheat sheet. So if inventory decreased, what happens to cash? Well, I should say, if inventory decreased, what happened in the first place? Well, we must have sold our inventory. So if we sell our inventory, what happens to cash? Cash goes up. So it's going to be a plus. And then which section do changes in current assets go into? Right here, goes in the operating section. So that's an O plus. We have an increase in a prepaid expense. Prepaid expenses are like prepaying insurance, prepaying rent. So these are assets since they have a future value, and since prepaid insurance and prepaid rent are going to expire within a year, it's a current asset. So we need to go to current or increases in a current asset. So the rule says increase in current asset other than cash, we're going to subtract. So an O minus. And that makes sense. If you buy insurance, then cash must have gone down, so we subtract. Now we have a decrease in accrued liabilities. So accrued liabilities are liabilities that have accumulated but not yet been paid. Most common one are salaries payable or wages payable. So if we have a decrease in our liability, what must have happened? We must have paid off that liability. And if we pay off a liability, cash goes down. So this is a O minus. And don't forget, you can always double check your cheat sheet. Decrease in current liabilities is a minus in the operating activity section. All right, we have cash sale of land. So remember, land is a long-term asset. So that's going to go in the investing section. It's going to be an I. And since we sold the land, cash is going up. So that's an I plus. J, issued long-term note payable to borrow cash. So cash is involved. And a long-term note payable is a long-term liability, so that goes in the financing section. So F for financing, and since we received cash, it's an F plus. Depreciation expense, which every company has, it's going to go in the operating section, and it is a plus. O plus. Purchasing of treasury stock. So what type of account is treasury stock? It is a contra equity. So that's affecting equity, so that's going to be financing, an F. And since we purchased treasury stock, which way is cash going? It's going down, so it's an F minus. Issued common stock. So common stock is what type of an account over here? It's an equity account. So it's in a financing, goes in the financing section. And since we issued common stock, we got cash, so it's a plus, F plus. Increase in AP. Increase in AP. Changes in current liabilities go in the operating activity section. An increase in AP would be a plus, so it's an O plus. Again, now that one's a tough one to figure out. So if you need to review this video, go watch the video. If current liabilities increase, add to cash flows. This rule here is easier to analyze. If liabilities go down, then you must have paid them off, so cash goes down. So the opposite rule is the opposite arrows. That's how most people logic their way through that one. And then net income. Remember, net income goes into the operating activity section. And since it's a net income instead of not loss, it is a plus. Payment of a cash dividend. So which one of these accounts is affected when we pay a cash dividend besides cash? So cash goes down. What else is affected? Well, retained earnings, which is an owner's equity account, will also go down. So that goes in the financing section. So it's an F, and since we paid cash, we're going to subtract F minus. And that's it.